Hey everyone, I'm Lindsay Labonte, branch manager at Applied Mortgage, a part of Harbor One Mortgage, and I am here today with my colleague, loan officer Jeff Lapointe. How you doing, Jeff?
Good.
Awesome. So we are going to chat a little bit today about down payment assistance programs. In this market right now, with everything as competitive as it is for buyers, any little bit helps. And I think having these opportunities for down payment assistance is something that, people don't often talk about, or they assume maybe they can't get their offer accepted because of down payment assistance or something like that. So we want to provide some clarity around the process. How do you find out whether you're eligible for down payment assistance, what programs are out there, and what the actual process looks like. And Jeff on my team has a lot of research on this. He's got some people going with down payment assistance, and I knew he'd be able to provide us with the real facts around down payment assistance programs. So I want to just kind of go over the different programs that are currently available first, and just in real brief, and then we'll go into the process more around using them and some tips and tricks and that kind of stuff. So I hate to share my screen the whole time. I'm just going to share it for a second, and that way we can kind of go over some of the loan programs that we have here. So Jeff, tell me a little bit. So I want to go through mass housing, the two mass housing programs, first-time home buyer, down payment assistance, the workforce advantage, and then we'll do the federal home loan bank programs, the equity builder, housing our workforce. And then real quick, we'll touch on some of the municipal grants that are available. So you want to just start off with mass housing so that everyone doesn't have to listen to me talk the whole time?
Absolutely. So with a mass housing, there's a couple different options for the down payment assistance, and that really comes down to what income bracket the borrowers fall into. With mass housing, we have a little bit more flexibility in some cases because it goes by what we use to qualify the borrower with. So if there's income that's not needed, to support the loan, but we can, exclude in order to get them to fall within the income brackets, we have a little bit of play with that. But essentially the two different categories that it falls into is the workforce advantage, which is the larger of the two down payment assistance, and that's a $30,000 second mortgage. That's a 0% interest. There's no payment with that. It's deferred until either they sell the property, refinance, or pay off the first mortgage. The second option is their regular 2% interest rate, 15-year second mortgage. That's up to $25,000, or I'm sorry, it's now $25,000 regardless. It used to be a percentage of the purchase, but now it's $25,000, and that has a little bit of a higher income threshold.
Yeah, so we pulled the income limits just for Hampshire County, Franklin County, out here where we are in Western Mass. So, of course, consult your loan officer. The income limits are definitely the biggest, one of the biggest factors for all of these types of grants and down payment assistance programs. So depending on where you're buying, they're going to use different income limits, different income calculations. And like Jeff said, some of the programs go by the entire household income, no matter what. Some of the programs just go by the borrower's qualifying income. So that's a really big key point too. So like you can see the mass housing first-time home buyer conventional program, that's probably going to be the one that's the most versatile because it does have the highest income limit. In our area, it's about $127,000. It does have to be used with a mass housing first mortgage. So borrower would have to qualify for mass housing for their first mortgage and then meet the requirements for, depending what their income is for either one of those programs. So like Jeff said, it just changed to a fixed set amount. One of them, which is the Workforce Advantage, which has the lower income requirements, is fixed 30,000, and the other one is 25,000. So those can definitely be great options that could potentially work. The other thing with mass housing is that is a loan program that exists that's, you know, basically guaranteed, at least right now. It's not a grant. It's not based on funding that's potentially going to run out quickly. So at least for now, that is their down payment assistance loan, second mortgage that's coupled with their first mortgage. So if a buyer is qualified for a mass housing first mortgage and second mortgage, that pre-approval, there's not really the worry that funding is going to just run out or disappear or anything like that. They do change their guidelines frequently, so that, you know, just like any other loan program, the buyers have to remain qualified, but the funds are a little bit more solid. So switching gears to kind of the next most common down payment assistance that we see, the FHLBC programs, Equity Builder, and Housing Our Workforce. So Jeff, you want to run us through these programs? You just got some people that are trying to apply now.
Yeah, so with these two grants, as Lindsay mentioned, they're limited funds. So a lot of the work to qualify them, you know, we want to get as much of that in place prior to submitting an application, as you know, as much as we can, you know, to avoid any hangups, because it is very competitive to get these grants. The biggest piece that we want to make sure is that we are calculating the income correctly, and it does have to be the entire household income. So even if someone's not on the loan, if they're going to be living in the house, we do need to make sure that we're documenting their income properly. And it's not just qualifying income. So even if they have, you know, a second job that we're not able to use, or overtime or bonuses, even if we might not technically be using that for qualifying, we have to count it when we're seeing what income thresholds they're in. So with the two grants, they can be used with a variety of first mortgages. So you can use it with an FHA, a conventional product, VA. Currently, we can't do any in association with a renovation loan. So that is one limitation on it. But it is versatile, that it can go with a wide variety of first mortgages. The larger of the two is the Equity Builder. This is a $30,806 forgivable second lien. They had to use a nice round number like that, so it's easy to remember. And this can be applied towards a down payment and closing costs, which is great because with the mass housing, that is a down payment assistance, you know, program. So they do still have closing costs that they need to cover. With this, it can be used in combination with closing costs and the down payment. So it does really limit the amount of money out of pocket that the borrower potentially would have to put. And then the Housing Our Workforce is the smaller of the two grants. This is either 10% of the purchase price up to $25,000. Just like with the Equity Builder, it uses the entire household income to qualify. So again, we want to be really thorough with that. But that one is not limited to a first-time home buyer, which, you know, is certainly a nice benefit, because most of these down payment assistance and you know, grants are targeted towards first-time home buyers, and this is one we actually can use for any buyer that qualifies. And this one has a minimum contribution of 1.5% of the purchase price by the borrower. So again, it still limits, you know, their cash to close quite a bit, but does have a little bit higher than the equity builder.
Awesome. Thanks, Jeff. And I think, you know, the biggest inhibiting factor that I would say right now in this market are those income caps, right? So like out here where we are most recently, Hampshire County median price points like 400,000 plus. So, you know, we're talking about the income below 80% area median income limits, or, you know, between 80 and 120 roughly. Realistically, right, if we're just speaking truthfully, for somebody to have the income limits where they're able to qualify for those programs, they really have to not have any other debt to then be able to qualify for a mortgage based on these price ranges. So there is that challenge. You know, the down payment assistance is there. I think that's why we most commonly see the mass housing program, because that'll go up to 127,000 in our area, which gives people much more flexibility. But there are opportunities. There are houses that are still reasonably priced where this can work out for folks. So definitely something to keep in mind. Process-wise, you know, we started with kind of the boring, just general facts about these programs. I think the process piece is really the most crucial. Jeff and I were just talking about this. You know, so the Equity Builder and Housing Our Workforce programs roll out pretty in, well, how many times is it, Jeff? It's like 6.
It's twice a month. They've got it scheduled now through July, so it's the 1st and 15th of every month through July.
Yeah, and so we just had some funds come available on the 15th. And how fast did those get used up?
They were released at 9 o'clock. It was about 600,000 in total that was released, and it was used up by 9:12. So
Wow.
it's incredibly competitive to get it.
Yeah.
So yeah, we do want to make sure we've got everyone on board, ready to submit the application, you know, as soon as we can on those dates.
Yeah.
You know, the nice thing is with there being, you know, releases every 2 weeks, if it's a, you know, 60-day lock, you may get a couple swings at it, but it's still, it's, you know, very competitive. And you want to, for the grant programs, you really want to make sure you have a plan B in place. Because if it's the make or break of a transaction, it's, you know, a risky, you know, situation, and they potentially could lose out on the house.
Right.
You know, if that's their only way to acquire it.
Right. So they either need it to really be contingent on receiving those grant funds. So if they don't, you know, they can have their deposit protected that way, or have an alternative plan, which would likely make the most sense. And from the perspective of realtors that are reviewing people's offers or helping people to craft and submit offers using any type of a grant program, where it's one of these we've spoke about or other ones, that's really something to consider too. Do the people absolutely have to get the grant money in order to buy the house? And if so, making sure that they understand that and that they're protected, or understanding what their backup plan is. Whereas with the mass housing program, their pre-approval, either way, the first mortgage and second mortgage are linked together under the mass housing program. So it's contingent on that coming through and being available anyway. So I wanted to also just share that there is a website too that lists the local state and municipal grants that are available. So if you go to mymasshome.org and you go to down payment assistance, this website actually has these programs, mass housing and the Equity Builder and Housing Our Workforce that we just went over. And if you go to the municipal down payment assistance programs, you can actually search by the region and see what local agencies are offering any type of housing grants or housing assistance. So for example, Valley CDC, 25,000 mortgage subsidy for first-time homebuyers. Now, again, these are all going to have their own requirements on your total income, what your total debt compared to your income can be. Maybe they have sometimes asset restrictions or requirements where like if you have, you know, $25,000 saved, you're therefore ineligible for the program. So basically it does require some research and some legwork. We're familiar with a lot of the local agencies that provide those types of programs, and oftentimes we'll get on the phone and do a conference call or whatever is needed to figure out whether everything will jive. But I think the most important piece of the puzzle is, it's one thing if you're getting a down payment assistance loan, like through Mass Housing, where it's all part of the program and it's more guaranteed that way. And I'm saying, I don't mean guaranteed like you're guaranteed to get the loan. I don't think that's a word I'm supposed to use, but you know what I mean? It all comes together versus the grant programs, which come and go and are based on the funding being available. So awesome. That is just a quick summary. Jeff, anything else that you think we should add, or experiences that you've had?
I think just the only other thing in with the grants is anytime, you know, a lot of times we'll have people who find grants other places. It's just important to, like you said, check the requirements, because sometimes they have certain lean positions that they need to be in. So if you are planning on using like a Mass Housing with, you know, the down payment assistance, there's some cases where you're not going to be able to use an additional grant because, you know, they won't take a third position. So again, just, you know, another thing to always run by, you know, the loan officer to check, and we can take a look at it and, you know, make sure that there's not going to be anything that would prevent us from being able to use it.
Good point. You can't always mix Mass Housing first and second mortgage and get another loan potentially on top of it. So yeah, everything's got to work together. There's also, as you were speaking, I was thinking that there are also employer loans that are sometimes available. So like we're here in the 5 college system, again, out in Western Mass. So many of our colleges have second mortgages that they will give to eligible staff members or faculty members. So that's another thing to just keep in mind when you're searching. Oftentimes people think down payment assistance and it's this lower income, you know, bracket that we're talking about, but there are also employer assistance loans for down payment that may be eligible anyway, and have probably their own restrictions and own requirements, but that's something to consider and be familiar with too. So myself, Jeff, sorry, we have a Jess on my team too, and I just looked at her. Jeff, myself, the whole team are familiar with these down payment assistance programs, familiar with the strategy. That's our favorite thing to do, is to just talk about what scenarios will work best. So thanks for tuning in today. We have more webinars coming up, and our next one is, I'm going to get this wrong, and of course I don't have my screen up anymore, so that's the wrong screen, but I think it's May 2nd, and it's our cash backed offer, our home run program. We're having really great conversations around using that loan program to help people in this competitive market turn their offer into a cash backed offer. And then we are also on May 22nd doing a construction and renovation webinar to brush up on what the requirements are around construction and renovation loans. Great opportunity to sort through the challenge we have around inventory. If you can renovate or build, then inventory is less of a problem. So thanks, Jeff, for being here with us, and thanks everyone for tuning in.
Thank you.